than usual. Sorry about that. Usually we're live around 9:35 a.m. London time. Now we're going to take a look at the markets as we should do at this presentation. And if you're new to this, maybe watching on YouTube, then my name is Alejandro Zambrano, and I work for the site investingcube.com, which is a site created with a bunch of great writers. And what we do is that we produce a lot of free content to help you hopefully trade better. We present trade ideas, how to manage risk, what's moving the market. So don't forget to check that out as well. I'm available on Twitter at AlexFX00 if you want to stay in touch with me or you have any questions about what I do. There you go. You got the link for that. And don't forget, of course, to subscribe to the YouTube channel, which is probably the easiest thing to do. Okay, we're going to talk about the market. So we had some big moves yesterday, in particular in cryptos. In the more traditional markets, it's been a bit quiet, but there are things happening. So we talked about the Aussie stock market yesterday. That one is up even further today. We talked about the break here, lifting things to the upside. And when we looked at this one yesterday, the market was pretty much here at 69.63, and we're up quite a bit already. And it's a lot about the stock markets as we begin this year. Stock markets were the best performing markets, well, not the best performing markets, but from a trading perspective, relatively easy to understand by the end of last year. And it sort of continues this year, whereas currency markets continue their slightly boring activity, as it has been really since I think 2018 or something like that. Yeah, so we're going to talk about this. We're going to talk, of course, about a bit of crypto as well, which is having a lot of action. All right, so let's begin then. We'll begin with the euro. And if you have any questions, by the way, just pop them in the chat box. And what I will do is I'll answer them as soon as I cover the main presentation here. Okay, so this is your euro versus the dollar. And a few days ago, we said look to buy here. And then we're trading here yesterday. I said we're back at entry. Probably a good idea to get out if you can. And we said if it slips to the downside, you can potentially buy. Now, I think we missed that little entry with just a few pips yesterday. But what I did here is I increased the buy area a little bit to 111.60. So if we do revisit 111.60, I do think people might look to buy here. And then they're probably going to attack something like 111.80, 112. And then we'll see how far it goes. My longer term view is bearish, as long as trade below this high here. It's also something we discussed yesterday. We had a special webinar about the 2020 top trade ideas, and that's, again, it's a free article. You can just read it online here. You just need to become a member if you're not a member already. I'll send you the link to it. You can check it out after we're done here. What else? GBP versus the USD. So GBP versus the USD, a few days ago, we're trading up here. I said it's probably going to come down. Maybe we can look to get involved here. The market did go up and then it went down. So what happened over the weekend, which is obviously we can't really control, it's just that you had two members from the Bank of England being quite dovish, and that caused the GBP to get under pressure because people are now anticipating that they might cut rates at the next rate meeting. Let's actually see if I can pull that out. So the expectations of a rate cut in the meeting in 15 days and 1 hour is for potentially a rate cut with a 47% likelihood. Currently, actually I can't see here. So currently the interest rate is at 75 basis points in the UK, and you can see here that for the next meeting, there is 47% likelihood that it's going to be at 50 basis points. And by September this year, there's even a 28.4% likelihood that we're going to be at cutting 2 times, and the rate is going to be at 0.25%. And the likelihood that we're going to be at 75% by September is just the 27. So there's a majority of the way the market is positioned itself here is effectively looking for a rate cut, really. And right now, it's not fully priced in. And if we continue to get bad data, this can continue to sort of weaken on the back of that. I did actually write an article about that. Let's see if I can find it now. I wrote this one as well. You definitely want to check it out. This is free. You don't even have to register for this one. Next week we have Bank of Canada. So Bank of Canada will have a rate meeting. I share my view on Bank of Canada there. And let's see if I can find the GBP. Yeah, this one. This article is mostly about the pound versus the Indian rupee. But you can talk about, you can read a little bit here about the situation in the UK. So you can check that out as well. Now, let's move along here then. So overall, people are getting anticipating a rate cut, and that's why the market is so bearish. Now, for me, we already know that the economy was weak. It's just that the Bank of England members, two of them, decided to speak out. One on Friday last week, and then you got one on over the weekend. So then suddenly people focus on that, and that's really what happens. Like macro forecasters, what they try to do is try to predict where the economy is going to be, where the central bank is going to be, and what they're going to do, and then they try to position themselves, and then they just wait for policymakers to tell the market what they're going to do, and by then hopefully the market would move. But the problem is this, though, when it comes down to financial markets, is that it can go a very, very, very long time before the market starts to price in the macro scenarios. Think about people saying that the economy is going to come crashing this year. I mean, right now there's nothing priced in that, right? So it's a bit difficult, especially when trading in the short term. It definitely knocked down the currency, and we're just so close to reaching that trend defining level. The market's now risen to the upside and went down, and for now I'm going to continue to be bullish here as well. There's no change to the outlook as long as trade about 129.47. Of course, with the benefit of hindsight, the market is down here, right? So if I wasn't in the market already, if we haven't shared this view already, then we probably would not have put the stop loss here. We put it here, which is the actual low. Now this is the dollar versus the Japanese yen, and again, this is a bit of a difficult one because there's two levels to put your stop loss. And the Aussie dollar here, the Aussie stock market, is a very good example of that. So this is the Aussie stock market. So this is the market was trading within a nice, beautiful rectangle, and it goes up, takes out the high, and then comes down tumbling. Here, the market could have gone down and then up, but instead it took out the high. So what I said here is that the break to the high is going to take this upwards. So that was the alternative. And it's the same situation here in the dollar versus the Japanese yen, where the market is trading in some sort of a rectangle, and it took out that high, and it's perfectly fine to buy here at 109.72 in this little spot here, with maybe a stop down here. But there's always a risk that it wants to correct lower before heading higher. So just to summarize, it's perfectly fine to get involved here if you would like to. I'm not saying you should go, but that's what I think the market will do. Some people will be buying here, stops here, and then you have the stronger pullback that was down here with maybe stops down here. There's no right or wrong. You just need to sort of choose what you want to do and then stick with it. No one knows exactly if this trade idea is going to work. And in my brain, I think patterns, this is a pattern where the pattern here might work out, but I mean, here it definitely worked out, right? So the idea is to trade the same pattern, and when you do get this nice profits, those winnings will cover many of the losing patterns. The German DAX is also very similar to the Aussie stock market, and it's also similar to the dollar yen in a way that it's probably even more similar than the dollar yen, because the market was down here, had a very, very strong rally, and because the low is down here, people are not really that interested to put their stop loss orders just down here. So they're looking for that little pullback, and that's why you're seeing this market correction. Now, some people are brave, they're going to be buying here, as you can see. But my preference here is, and this is also even more straightforward than the dollar yen. Here, we want to let it go down to the first fib or 50 fib, turn bullish from here. The alternative is just a break to the side. So check that out. The Aussie stock market, the AU 200, it's actually called the ASX 200. Compare that with the dollar yen pattern, and compare that with the German DAX pattern, and keep that under observation over the next few days, because all these markets are at three different phases, but at the end it's the same pattern we're trading. Crude oil is at that trend line, and I think we will have a little bounce to the upside. And I've been bullish here for quite some time. I'm just gonna stick with this. I can tell you like this: many times you can think the other way around. Is this a good opportunity to sell here at 58.06? If it's not a good opportunity to sell, then it's probably a good opportunity to buy. Because why is it not a good opportunity to sell? Because you have support here, down here, and you have the highest resistance up here. So if people would sell right now, if they're lucky, the market goes down with another 4%. But if they're wrong, and we have a normal little bounce, so after such a decline, you have a normal little bounce, then we can easily be up with 4.37%, right? And if it really goes mental, we'd be up with 8%. But can we bounce back to the first fib here? I had to adjust the fib, by the way. And get a 5% return? Yeah, easily. So here, the risk reward ratio for being short down here does not make sense. So I'm going to stick with this view. But yeah, I was assuming that we're actually going to bounce slightly earlier than, I mean, we haven't even bounced it, but I was anticipating a bounce from here. How about the S&P 500? So this is the S&P 500, and it's a bit of a difficult situation, much like the dollar yen, because you have a major low down here, and the question is, are you gonna be buying on the first support levels? You're gonna be buying at the lower levels. I'm gonna leave this up to you. You can make a decision here. Remember, you don't always have to trade. The markets are always there. There's not always good markets though, but you know, you always have something happening somewhere. So if you don't feel comfortable, there's no need to force yourself to trade. Now we said we're going to talk a bit about Bitcoin, and I like it a lot. I mean, if you take a look at my Twitter, let's see if I can find my Twitter now. This is my Twitter account. And I say, and it's back. I published this yesterday. Why is it back? Well, because look at this. This is just green and green and green and green. If you traded Bitcoin in 2016 and 2017, the market just went like that. And then by the end, it went crazy. And this is exactly what it is. It's a bit crazy. And you can see Bitcoin upwards by 8%, which is like most coins. If they do 11% on one day of the majors, then that's good. They do 16%, and that's really good. But Bitcoin Cash up with 25%, and there's another one, a fork of Bitcoin Cash, which was up with 150%. That is when things go a bit crazy. And what's interesting here, and why I'm more enthusiastic about this now compared with before, is that before it was mostly Bitcoin leading, right? It was Bitcoin is up with a few percent, and everything else was rather mixed. Now everything is green, and you have some funny coin like Dash. Like, I don't know who uses Dash, if anyone uses Dash. Dash used to be cool. Dash used to be trading, I think, at $1,000. Now it's at 86. But people are buying. They're buying good and bad stuff. And that reminds me a lot about the end of 2017 when the market was just going crazy. And when you see those tight correlations, and that's an indication that something's going on. To give you a good idea, you know, when you see the dollar weakening against many different currencies, so gaining in many different currencies, then that shows you that the market move is real. On the other hand, if pound dollar is a little bit lower, euro dollar is a bit higher, Aussie dollar is a bit higher, and New Zealand dollar is a bit lower, then, you know, it's mixed. It's more local. Maybe some people buying Aussie, people selling the pound, but there's not like a strong congruent trend. But this is something that is telling us here that things are changing. Now, right now in Bitcoin, we need to be a bit patient. So I did an update on GBP versus on pound. This one, Bitcoin to pound. So a few weeks, not a few weeks, I'll take that back. I think it was last week on January 6th. This is Bitcoin, and Bitcoin was trading inverse head and shoulders. You can see you got your left, the right shoulder, and the head. And I said the break to the upside here is probably gonna lift price to 6,974. Here is the update I did yesterday. I mean, you can see how we did breach that level the same evening that I published a report. The market went up, retested the breakup point, and then we went upwards. And if we look at BTC GBP today, you can see that we almost touched that take profit level. Now looking at this today, you can see that we have a bit of a trend here in normal Bitcoin. So you have, this was its target, by the way. This was the target of its inverse head and shoulders. Now if I take a fib from the current high to the current low, you get these levels. And effectively, first fib breakup point here, that's the interesting spot. If we go down to this level, I think some people might look to get involved, then they push upwards. And the trend is going to remain bullish about 7,639. Now, we reached the first fib target, so you might ask, well, what's next? Well, we have a break of this pattern, which is a channel. And you can even call it a bit of a wedge. So if you take the difference between sort of a midpoint section here, you can apply it to the breakup point. And that tells you we can go up to with about another 40%. And that's what I'm looking for. And there's similar setups in many other markets. So yeah, I would check this out. At the end of the day, though, it's like any other market. It's about the risk-reward ratios. And right now, the risk-reward ratio is at 4.18 if we pull back. So it's definitely interesting. You need to be very careful though trading cryptos, especially with CFD brokers and people that don't allow you to trade cryptos over the weekend. Because if they don't allow you to trade cryptos over the weekend and there are some big moves, then you can find yourself in definitely a bit of trouble. If the market has moved a lot, then you can have some substantial gaps. So please bear that in mind. Okay, let's see if you guys have any questions. So we have Hyder asking, Mr. Hyder asking about the Dow. So we're going to take a look at the Dow. Let's do that. As well, I'll do the update tomorrow, but I am flying out to Hong Kong on Thursday afternoon. So on Friday, there won't be a market update. And I'll be back in London on Monday, but I'm not sure in which state I'm going to be because I'm going to arrive really early. But if I can do, I'll do an update probably. So no update on Friday, but probably an update on Monday. But it could easily be midday or in the evening. Sorry, on Tuesday. Here's the Dow. Dow double top, little sideways price action, little rectangle. And if we take out 29,066, this market can go up to 29,348. Very straightforward. Let's see what happens. That's it. The alternative is we trade lower, go a little bit down, and then go upwards. I hope that answers your questions. Gold. So we forgot to cover gold. You're right about that. So this is gold. So gold is in a downtrend in the short term. Not very enthusiastic. I'm not very enthusiastic to trade this to the downside, given the big trend. But as you know, we had a very nice, we had like a wedge-like pattern. We got that break. I know that the break in Bitcoin and gold is not the same because it's a more proper wedge. In Bitcoin, you see more of a channel, but you can see the idea, right? You took out that level and then the market just rose. Maybe that is what's happening in Bitcoin, and that's also one reason why I'm getting excited. Now, here you have that big move. We corrected the first fib, almost went down to 50. And the way the short-term trend is looking, it does suggest we can probably continue to go down and maybe reach that 50 level. And around this level as well, you see these highs, which I think are interesting. So what do you want to keep an eye on in the very short term? Well, in the very short term, the price is creating lower and lower and lower highs. And as long as it creates these lower highs, and as long as it's trading below 1563, and then this market can go down to 1536, and then maybe to 1526. So that's what I'm looking for. And take that out, then we'll probably go up a bit and then down, and then this can be the base to attack the 2020 high. All right, I'm gonna wrap things up, guys. Thanks so much for watching. If you do have any questions, do let me know as well. Don't forget to click on the little button here that will load this YouTube channel, and down here there's a like button. Don't forget to do that. Why is this important? Well, because if you like it, I think you should. If you like the presentation, then I think you should like it, because that helps to let Google know to show the video to other people that might be interested. Uh, and obviously, if I see that you like these content and you read it and you check it out, then I'll do more of them. So it's very, very straightforward. Okay, guys, have a beautiful day today, and I hope you have a good day. And I'll see you guys tomorrow morning at 9:30 a.m. London time on the webinar page of investingcube.com. Thank you very much, and have a good day. Cheers.